this topic is going to assist you to retain that money, right? So you save it, you toil for it, you build it over decades, and you want to ensure that it's available to you post-retirement, correct? That's one. Number two, with the right kind of planning, healthcare does not need to be a morbid subject, right? It becomes a morbid subject when you don't plan for it. And it sort of plays on your mind. And then you have the issues of both financial and mental health to deal with that very critical situation. So what I'm going to do is give you a quick outlay in terms of what the sector is moving towards, what the government outlay is, what's happening demographically across the country, give you some snippets of what are the new aspects that are going to impact health insurance, specifically to some unknowns, which we believe will not have an impending impact, but certainly will. And last but not the least, we'll talk about how we can sort of manage both healthcare and health insurance by having some astute planning and some very smart decisioning in terms of taking care of your healthcare for future needs. Yeah. So just give you a very quick update on the healthcare industry and from a government perspective. And just to nuance this to what's transpiring globally, so India will be close to 2.5% of its GDP would be attributed to healthcare in this country. And when I say healthcare, I don't limit it to health insurance. I mean it also attributes itself to the health infrastructure, which is about 372 billion US dollars. And if you were to draw a parallel in terms of what happens globally, although it's not here, the US has about 9% of its GDP attributed towards healthcare and healthcare infrastructure. If you look at the key trends in India and you see healthcare premiums or health insurance premiums over the last 5 years post-pandemic, you will see it double. So in 2020, we had about $7.4 billion in terms of premium. That very quickly is going to touch about $16 billion this fiscal. So if you look at what India is doing for healthcare and what kind of investments it's making and what kind of skills it's developing, and you'll see that there has been a clear focus from the government in terms of allocation of funds. So the government per se is looking at close to around 90,000 crores in this budget being allocated to healthcare. Of the 90,000 crores, they're also looking at about supporting a 50,000 crore loan program in terms of interest rates. So that is in terms of the financial aspects. If you look at the skill development, India had about 0.83 crore doctors, and now we will have 1.30 crore doctors. But yet, if you look at it as a penetration of population, you have one doctor per 1,500 humans, and you have 1.7 nurses per 1,000 humans. Still grossly understaffed. Nevertheless, it's a move in the right direction. And if you look at statistically, what are the trends that are emanating in the country, and you'll see that, 70% of Indians still live in the premise that their families' out-of-pocket expenses and their children will support their healthcare needs. This is changing. And why is it changing? Typically, if you see the demographic structure of India from joint families is moving to nuclear families. So this cross-polarization of families supporting each other in terms of healthcare needs is getting decimated. So that's one aspect fabrically that one needs to sort of attend to. Number two, if you look at the average cost of healthcare of a retiree, today, as we see it, is between 10 and 15 lakh rupees, right? And I have a slide later on which will talk about medical inflation versus normal inflation, and we are astounded to see the difference. Number two, you're looking at about a 15% increase or inflation in healthcare costs. Life expectancy is going up because of lifestyle, behaviors, Medicare, and last but not the least, the kind of interventions that are taking place, recovery periods are much faster. So something like a cancer that could take, 6-7 months to recover, the medication now and some of the treatments like data treatment, which has precision cancer cell treatment, reduces the recovery period by close to 5 to 6 months. All of this comes at a cost, and therefore that inflation that you see over here. And if you see the senior citizen population of India, that is going to rapidly grow in the next 50 years. So it's 10% of the population today. By 2050, it'll be 20% of the population. So you're seeing a doubling effect in the next 25 years in terms of the demographic dividend getting evaporated in some sense. So if you look at some of the things that are transpiring, like I mentioned, average healthcare cost is around 10 lakh rupees, annual increase 12 to 15%. Out-of-pocket expenditure in this country is as high as 62%. 62%. So typically, if you look at statistically, 7% of the population in India moves from above the poverty line to below the poverty line only because of healthcare costs. Only. So one chronic disease for a family which has an income of parents and children in the vicinity of 60 to 70 lakh rupees, where the average cost of treatment could be 30, 40 lakh rupees, just decimates the family income. People are selling assets, people are selling, dissolving FDs, so on and so forth, to try and finance that. So 62% of the population being on out-of-pocket expenses with that kind of, hyperinflation on Medicare is abysmal, right? Chronic diseases, 65% of Indians now, post the age of 60, have the chance of contriving one chronic disease. After 70, that doubles to 2 chronic diseases. So you could have high diabetes and proximate diseases because of high diabetes, which could be a liver disease, a kidney disease, and so on and so forth. Even a heart disease or cardiovascular disease emanating as a proximate cause of that. So the chances of contriving those diseases is high. Lifestyles have changed. Medical inflation is high. Out-of-pocket expenses are 62%. So all of this put together is clearly a ticking time bomb. The government is taking some calls. And very recently, even within the Ayushman Bharat, they've added the population above 70, which is about 6 crore individuals in this country. But that also may not suffice, because that gives you a 5 lakh cover for a family. And a normal chronic disease will cost you anything above 20 lakh rupees. So the important point is that you need to supplement that insurance with your own personal insurance. So what are the concerns that retirees generally face, right? The big elephant in the room, let's talk about that. One is rising medical inflation, right? Prevalence of chronic diseases, as I mentioned, and the increasing life expectancy. So these three put together make for a very dangerous cocktail, right? Now, if you look at inflation per se, and you look at the general inflation in the country is about between 4.2 and 4.5%, fluctuates quarter on quarter. And if you look at the medical inflation, as we see the trend line today, is about 11.7%. And that is going to rapidly grow. I would envisage it to be in the vicinity of 15 to 18% in the next decade. Right? Life expectancy since 2011 and the last census is gone up by another 4 years. So financing those other 4 years, and obviously as you grow, like I said, beyond 70, contriving of diseases with the percentage of lifestyle diseases emanating beyond 65 requires for much higher financing, right? So, I'll just go back to this slide. So if you look at India, like I said, 10.7% of the population currently above 60, going to go up to 20%. Kerala state, today as we speak, is already 16%. So it's already 6% above the national average. And that is going to go up to 20% by 2050. And if you look at Kerala state as itself, as a whole, it's already above the national average of children aged between 0 to 14. So it's outpacing the demographic dividend that the country has. So what are the chronic diseases? And although we're talking about retirement and retirees and planning for the chronic diseases that we believe will not touch us and we'll be in abstinence from those diseases, the hard fact is that today, especially post-COVID, what we do see is diseases that emanated in individuals beyond 50 are happening with the 30s and 40s. Cardiovascular disease is the most prominent of those, right? So if you look at the age cohort and you look at the disease cohort, chronic conditions, I mean, you have still about 27% of the population between 18 and 44 contriving chronic diseases. One wouldn't have thought so 15 or 20 years ago, right? But if you look at it beyond 65, 64% of the population above 65 currently is exposed to 2 or more chronic diseases, right? So what are the concerns emanating from this very reality that's staring at us in the face? Obviously, there's a pandemic, and in the news just last week, there was another article where some doctors in the US have said we're staring at another pandemic 30 years down the road. So the distance between 2 pandemics from 100 years comes down to 30 years. Number 2 is prescription drug costs. Huge inflation over there. So if you look at cancer care drugs, right, the inflation is 2x of what medical inflation is as we speak today. Cost of long-term care. So if you look at hospices, right, where people are living their last stage of life, could cost anything upwards of 50,000 rupees to 75,000 rupees to 100,000 rupees, depending on the quality of the hospice that you're looking at. Like I said, the impact on the family and joint structure, that fabric itself is disseminating, and therefore reliance on family taking care of your healthcare expenses is drastically going down over a period of time. Last but not the least, out-of-pocket expenses. Like I said, 62% of the population funds their own healthcare. Just as a quick raise of hands, how many of you all have an individual health insurance today as we speak, right? That's still about 30% of the population sitting here. That means this itself defines what's there on the slide. Close to 65% of the population sitting here does not have an individual health insurance policy. So data is speaking for itself. Now, this is what I want to mention, and we very easily avoid this, right? Climate has a big impact on the way your body reacts to that situation, right? And if you look at the varying climate situations over the last 5 years, it's sort of oscillating from extreme heat to extreme cold to extreme floods, extreme earthquakes, and the medium is sort of getting impacted lower. And you look at the extremes, those eventualities are much higher. And what's coming out, and even if you look at the healthcare data and the claims data, clearly if you see a flood situation in a place like we just had one in Gujarat, and you had one in Assam, and you look at the impending disease patterns in hospitals within 6 months of that situation, you will see there would be high waterborne diseases, cholera, malaria, you would have cardiovascular situations, you would have kidney infections, liver infections, all emanating from there. So if you look at precipitation, you look at extreme weather disasters, Delhi itself, this summer, had huge issues on sunstrokes, heart diseases emanating from extreme heat. We went up to close to 46, 47 degrees in the summer. If you look at the winters, with the high pollution levels over here, you'll see bronchial and heart diseases go up extremely. You'll see a spike post-December, leading up right into March. So you see vector-borne diseases, you see water-related diseases, and you see the pathogens evolve over a period of time, right? So even the medication sometimes is not keeping pace with the pathogens. And there are articles where antibiotics today aren't sort of having the kind of impact on diseases and pathogens that they had as recently as 4 or 5 years ago. So what do we do as a country? Health insurance premiums are increasing, yes. People are more aware, yes. Is it increasing at the pace that you want it to increase? Absolutely no. So people would, buy a car, buy a holiday, buy stuff, an iPhone or upgrade their phone. But how many people think of buying a new health insurance or upgrading their health insurance or ensuring that they're protecting their future and their retirement years with an insurance in their early years? And there are advantages to that, and I'll talk about that a little later, right? So what are the economic pressures on retirement savings, right? Clearly, the most obvious one is you could spend 30 years saving, and you could spend exactly 3 months absolving, right? It takes one chronic incident to wipe out your 30 years of saving. So why don't you look at building a health savings account or a fund which funds your out-of-pocket expenses in your prior post-retirement years? And more importantly, why don't you look at buying a health insurance earlier? The advantages of that particularly are that as you age, you will contrive lifestyle diseases like diabetes and so on and so forth. If you buy the health insurance earlier, the waiting periods would have taken care of those lifestyle diseases and you will be covered for them when you need it. There's no point buying one when you already contrive the disease, because 9 out of 10 times the insurance company will either eliminate it from your coverage or even not even insure your coverage, right? So the reason why I said you need to buy it earlier is buy it when you're healthy and you don't need it, so that when you need it, you have everything covered. So preparing for retirement and the mitigation measures. So before 40-50, like I said, opt for saving towards health insurance, buy a comprehensive health insurance. And when I mean comprehensive health insurance, I mean you buy a health insurance, you buy a critical insurance, critical care insurance, you buy a surgical benefit insurance. Insurance products have become extremely innovative. So if you buy it when you don't need it, in the old days, you felt like it was a cash burn, but it's not the case today, right? The insurance companies also have innovation built into the products in terms of sum insured. So today, if you don't claim, right, you have something called a multiplier benefit. So what happens with that is that if you have a sum insured of 20 lakhs and in a year you don't claim, that sum insured grows to be 30 lakhs. And the second year you don't claim, that sum insured grows to be 40 lakhs. And the biggest advantage of that is the premium that you're paying for that 40 lakh sum insured, because you're healthy and you bought insurance, is the premium that you're paying for the 20 lakh sum insured actually. The balance 20 comes from a no claim benefit. But if you buy it after you've contrived a disease, none of this happens. You don't get that benefit, right? So how do you look at health insurance? There are multiple ways of looking at it, right? Now, you could very well say that I will fund the first 1 or 2 lakhs of treatment. So the easiest thing is to buy something called a top-up cover. What happens with the top-up cover? It is just a fraction of the cost of the base cover. So it sits on top of your basic Medicare. So if you say, okay, if I get into a hospital, I will pay the first 2 lakhs in terms of Medicare cost. I can afford it. I'll pay for it. And my top-up cover kicks in after 2 lakhs. So if you buy a 10 lakh top-up cover, any Medicare cost above 2 lakhs, right up to for 10 lakh rupees, gets covered for by the insurance company. And the premium for that is just 30% of the base cover. So that's one way to look at it. The best way to look at it is you have a base cover, you have a top-up cover, and you have a critical cover. And what's the advantage of that? God forbid you can even buy a vector-borne disease cover, which is separate. Now, I'll tell you the advantages of that. You have a health insurance worth 20 lakh rupees, and you contrive dengue, which is transpiring these days, typhoid, dengue. It's pretty rampant as we speak right now. And you go out into the hospital, and you have just a 30,000 rupee expenditure for dengue care. But what has happened? If you claim it in your base cover and you've not bought a vector-borne disease cover separately, for 30,000 rupees, you've lost the multiplier benefit of 10 lakh rupees. Why would you want to lose that, right? So option 2 is you look at a comprehensive health cover so that you're building insurance for as you're aging. And you have that sum insured available to you when you most need it. What you don't want is an insurance product that doesn't cater to your healthcare needs when you most desire it. The other aspect is that most people look at just having a basic cover of 4 or 5 lakh rupees. That's under insurance. That's the worst situation. Because if you get into a hospital and you have 10 lakh claim, you've paid premium for a 5 lakh rupee insurance, and on top of that, you had an out-of-pocket expense of 5 lakh rupees by paying that bill in the hospital. So having the right insurance is critical. So there are other ways of mitigating, healthcare risk. Most importantly is focusing on preventive care. So most insurance covers now have preventive care built into the app, and they have something called an OPD benefit. For example, we in Bajaj, if you pay a premium of 10,000 rupees, you have a premium OPD benefit of 20,000 rupees. What that really means is that if you don't get admitted in a hospital, but you're visiting a doctor, your child is going to a doctor, you have to take some x-rays, you have to take some CT scans, and you're not getting admitted in a hospital, but this is just preventive health care or some health checkups that you're doing, it's all funded for by the OPD cover. So the advantage is you're not using your, utilizing your IPD cover, you're utilizing your OPD cover, you're understanding your health status, which then gives you a direction in terms of what you should do with your health insurance. Like I said earlier, you build an emergency fund, and you ensure that you leverage the government schemes too. For whatever it is worth, it's important that you leverage those schemes. It's available for you. If you're 70 plus, please leverage those schemes. Apart from that, there's telemedicine, there's healthcare at home. All these are inbuilt now into the innovation of health insurance products. We also have something called a elderly care. So we have a healthcare rider, a senior care rider within Bajaj, which has a fall detection app. Now, most people in nuclear families, the parents could be in Bombay and the children could be in the US, right? God forbid if the parent falls and it's a single living parent in their house, how does the child know? So this fall detection app, if the parent falls, example, I'm just talking about innovation on products, and there's no response from the parent, this app signals to the call center of the insurance company. The insurance company calls up the parent. If the parent answers and he approves that he's fine, that's where it ends. If the parent doesn't answer, there's an automatic ambulance sent to the parent's house. And a dual call goes to the caregiver, which could be the nominee like the son or the daughter or whoever it may be. So that's the kind of innovation that is available with healthcare. Excuse me, and health insurance, right? What is really also playing up is cognitive care, right? And Alzheimer's, mental health, all of that is got a large play in healthcare today. Insurance products cover these too, right? And the government of India and the IRDA, which is a regulatory body for insurance in India, has also mandated Ayush treatment to be part of the health insurance product. So you could today now, as of today, also look at alternative treatment. So if you have a leaning towards alternative treatments, your health care and your health insurance takes care of that too. That was it. I hope this was useful. If there are any questions, I'm happy to answer them. Thank you very much.